How's it going, guys? It's your boy Mike from Seattle, and I'm here with my friend Justin again, who is already retired from real estate. He's absolutely destroying me as an out-of-state investor, destroying me as a local house hacking Seattle guy. He's even a better soccer player than me. We found that out a few months ago. Honestly, I just want to grow up to be a little bit more like him. One of the other things that he did before I did was use private money from our mutual friend Crystal to fund some of his deals. I also use money from Crystal to fund my most recent triplex. You can check out the video. I'll put the link for that in the description below. But Justin, seeing as you're so much better at being cooler and further ahead on the life plan than I am, please explain to us and explain to me how you've structured your equity partnerships and your private money deals.
Awesome. Thanks for having me here. Yeah, it was fun playing soccer with you. I don't think you can grow up to be me. You might have to shrink to be me because you're like a foot taller than me. But in terms of like the equity partner, you know, I've done, you're everybody who's watching this right now, you're going to run into the same problem that Mike and I ran into. You have money and then you're not going to have money because as soon as you start getting into real estate, you're going to buy. You're going to run out of money. But the passion is still there. You want to continue to buy.
Right.
So for me, that was on property number 20. 20 was when I started getting into partnerships. And there's two types of partnerships. There's the equity side and then there's the debt side. For me, I just assumed everything was equity, right? I was just getting in. I was like, okay, let's do it. So I ended up doing a equity partner, a longtime friend of mine. You know, when you get into real estate, that's all you talk about. And so over time, it was just a matter of time. Somebody's like, hey, if you need money for your next deal, like maybe we could partner up on a deal. And it was just at the time where I was like, hey, I found this deal, but I don't have the money. I know this person. Let's just figure this out. So we just did equal partnerships and we ended up buying that deal. That was probably, I want to say, in around 2019 timeframe. And that was my first one. I ended up doing 3 more subsequent equity deals. Today, I don't really do them. They're more labor intensive on my side. So I like more on the debt side. Because
So
on the
real,
debt
real
side,
quick, before we keep going, hold on. Explain to us exactly with this first person, this first deal. They brought all of the money, but you brought the team, the experience, and you managed the property, and then you split the profits 50-50?
so in this scenario, it was me and him. The original plan was 50-50. And
Okay.
then he had a friend and a brother that wanted to get into real estate too. And then so they're like, hey, they want in as well. So it ended up being 4 people. So it was
Oh, nice.
25%. And here's me, I was naive. I was like, these people want to invest with me. Let's just be equal partners,
Right.
And so we ended up buying the first property. I want to say it was like 150. And to buy it, we had to have 30K. So we each brought like, I want to say it was 10,000 was the entry.
Okay.
And so we had 40K, we bought the property, we had a little money in our account to start with, but everything was equal, but not time commitment.
Right.
I find the properties, I analyze the properties, coordinate insurance, coordinate the property management, the strategy. Do we keep it? The follow up on monthly statements. The one thing I don't do, which is my least favorite thing of investing, is bookkeeping. The bookkeeping and tax, one of the other guys does that. But for all intents and purposes, the other, call it 90%, I do.
Right.
And I quickly realized, like, ooh, I gave it up.
Yeah. Yeah. You,
But
you gave
hey,
them a lot of free work.
they got the goods. And, that guy is a smart, savvy person. He's probably like, this guy already bought 19 properties. He's on the come up. How do we join forces? So
Right.
we now own 4 properties together, that entity structure. But that was my first one. Then I was like, it came down to like other people would always ask me to partner, and then I'm like, no, I don't want to be equal partners. And then, but the next 2 I did, I was like, it needs to be better for me because like they generally have money but no experience. I have experience but no money.
Right.
So I'm bringing all the experience in the time here. So what I ended to do on the second and third one was the same deal. they brought the money for the deal. So let's say, for example, on this one, we needed 20K to buy it and then have some money in reserves. So that means, in essence, to be 50-50, they are 10,000, I was 10,000, but they fronted my 10,000.
Okay.
So the agreement was over 24 months, I'm going to pay you back. So 10,000 divided by 24, whatever that number is,
Right.
I paid that for 24 months. But during that time, the property was cash flowing. And so basically I used the profit of the property to then pay back.
Very smart. So no money out of your pocket.
Correct. That's another
Brilliant.
way you can grow fast
Yeah.
is anytime you're buying with no money out of pocket, it's almost infinite on how much you can go. Now
Mm.
it's a matter of deal flow and the time to analyze those deals.
Right. Right. I like it. That's very smart. Yeah. We both need to bring 50-50 to buy this deal, but you're actually going to bring 100. I'm going to pay you back my 50% over a time period, but I'm going to pay you out of the cash flow of the property. So I'm not profiting at the beginning as much or even at all as it pays you back. But I got my name on this property at a 50-50 split with zero money out of my pocket. 2 years from now, when it's paid off, now I'm making all this money. And I didn't even put anything down. I just had to have the knowledge, the experience, and the connections to go out and find the deal. Meanwhile, they
100%.
don't have to know any of that. They don't have to research somebody. They just have to bank on your experience and bring the money, and then they're getting paid back at a pretty quick rate. That's a very powerful strategy right there. I like it. I like
Yep.
it.
I was just like, well, how do I make this better for me? Right. And
Right.
then, so I did too like that. And then I was like, man, this is still seems like a lot of work.
Mm-hmm.
I don't know if it's worth it because still at the end of the day, we're still 50-50.
Right.
So the recent one that I did, there's two properties in this partnership. Um, this person brings in 100% of the money, 80-20. So they get 80%, I get 20%, but I have $0 in the deal.
Okay.
And so, and the way we structure it is when the money, like when we do distributions, 80-20 on the distributions.
Mm-hmm.
If we want to buy more, he brings 100% of it in,
Right.
and then I'm 20% owner, 80, and he's 80% owner.
Nice. Nice. Very smart. Yeah, I mean, these are creative, very creative ways that you, if you're watching this and you're out there and you're saying to yourself, look, I want to get started investing in real estate with little or no money down. A lot of people talk about that. It sells a lot of courses. It creates a lot of hype. And I really think the way that Justin's explaining it is the least BS, quickest, cut and dry. Like, this is how you do it. Learn the market, figure out what things are rent for, figure out how to find a good deal, not just an average deal, and then bring that good deal and be able to explain to an investor with money why it's a good deal and say, hey, you've got the money, but I'll manage and handle everything. And we're going to split it like this. Very smart. Yeah.
Right.
So, Justin, the only other thing that I would say I think people would probably want to know is, great, awesome. You've explained how you structure the equity deals. But how do you find those people willing to do that? Where did you meet or run into or find these individuals, and how did you convince them to be your partner?
All these are basically arm's lengths, meaning literally like they're already in my network. Before I even got into real estate, they're already in my network.
Mm-hmm.
And once you get into real estate, you can't help but talk about real estate, right?
Right.
So
Right.
it's like people with kids, right? They always talk about their kids because that's where they spend all their time.
Mm-hmm.
So real estate investors always talk about real estate. So every time I'm out at whether it's a real estate networking event or at work or at a barbecue, whatever that is, I'm
Mm-hmm.
always talking about real estate. And then inevitably somebody is like, been thinking about getting into real estate.
Yeah. Yeah.
I'm like,
Always.
oh, if you're interested, let me know.
Right.
And the way I phrase it up is like, I have these opportunities. I'm not asking for you.
Yeah.
Like I originally like I was like, hey, let's ask. But now it's like I present opportunities. If those opportunities work, awesome. I'm
Mm-hmm.
not trying to like, you know, grab somebody to become a partner with. So
Mm-hmm.
it's more if this works for them, sweet. Let's move forward with the deal because I want everybody to be happy. It's much
Sure.
easier.
Yeah. Yeah. No, I think it's powerful. Probably the most underrated aspect of real estate investing in terms of the skills you can develop is networking. One of the very first things that Zuber, who wrote this book that I always keep here with me because of how impactful it was, he told me after I bought my first deal, we had our first interview together like 5 years ago. He said, you need to learn two things. You need to learn seller financing and you need to learn networking. And those are the two most powerful things when it comes to scale, finding opportunities, staying ahead of the curve, beating whatever the economic problem of the day might be. If you know those two things, you're going to be just fine. So, Justin, any final thoughts?
When it comes to the partnership, not all partnerships are great. So make sure you're thinking about the long term, right? Like, do you want to, fast forward 5 years, 10 years, 20 years? Would you want to be a partner with this person? And think about like the exit strategy as well. So, like for me, for example, like I'm friends with all these people, but over time, it doesn't make sense to own only one property. So, or two. So like I'm going to the partners and I'm like, we go to 0 or we go to 10 properties. Right. So the ones that say go to 0, I've since bought out one of the partners. Then I can dissolve an LLC, get rid of all that extra bookkeeping that I hate, and I simplify the process, right? And so that works for me. Now the other ones, they want to continue to grow. Perfect. We need to have, what you're going to realize is, you need some scale to make these profitable. So one property is not really going to do it, because what people don't talk about, QuickBooks is like $100, $150. Bookkeeping, if you hire it out, it's a couple $100 a month. Your taxes is going to be $1,000, right? You're registering your business $500 a year. So you've got to be making enough money just to keep the lights on.
Yeah.
So that'd be my pro tip, is like, one is getting in, but think where you want to take this thing long term. Plan, kind of strategize that, put that into your operating agreement up front, so that there's no issues as you develop into your partnership deal.
Yeah, no, I agree totally. You always want to think about the long-term effects. You always want to look at how you're going to scale, because the more units you get, and that's how it is for units, whether it's within a partnership or just your own properties, the more units you get, when there's a problem with the one, you've got more properties to offset it. Just makes it that much easier to cash flow long-term with an entire portfolio versus just one property. That being said, every property should be able to stand on its own, in my opinion. But yeah, it definitely helps when you get up to bigger numbers. So Justin, thank you so much for being here, taking the time. You spent some time with us today. I'm looking forward to getting these uploaded. I'm sure people have questions for you, and leave comments down below. Thanks for being here, and we'll see you guys next time.